Hi guys, can you please put pluses that you can see slides and hear me? Okay, fantastic. How are you doing? Do you enjoy the rally of the market for the last couple of days? All right. So tonight we're going to cover the advertising industry. It's quite contradicting industry in current times because some people, some analysts will definitely recommend to stay away from this industry because majority of businesses, they kind of suffer and they're reducing their advertising budget. And of course, this kind of industries, they are going to suffer. But tonight we're going to cover this specific company, Omnicom Group. And I find it quite interesting. And we're going to compare how, like current time, current crisis, and the crisis which was in 2008. And we'll see how this company operated during that time, which was pretty tough for advertising industry as well. So maybe even tougher than now. All right, that would be our main goal for tonight. And we'll see, is it good time to invest in this particular company or this company in general, or maybe we'll have to avoid it. All right, guys, before we start, disclaimer as always, remember that whatever we cover today during the masterclass, it's educational material, and that you have to make your own decision. It's not an advice. So before you place any trades, you have to consider your own circumstances, look at your portfolio, your amount, sizes, etc., your knowledge, etc., etc. Okay, put pluses, please, that you understand that, and then we'll continue. Okay, fantastic. All right, plan for today, as always, we're going to cover the current market situation, what is happening. Then we're going to look at pros and cons of investing in advertising industry in current times. And then already we're going to analyze the company, which called Omnicom Group, OMC. By the way, we covered this company more than 2 years ago. And after that masterclass, it's moved up. And like I made some money on it, and then I didn't have a chance to buy because it was always quite pricey at that stage. And now it went down. But I'm just wondering, does anyone also have experience with dealing this company, or nobody dealt with it? If you put 1, if you dealt, and 0 if you never dealt with this company. So if it is new for you, okay, so it is to know. Okay, 0. Because it's went down for a while and then it's moved up. So kind of we didn't have too much chance to deal with this. Okay, great, Matt. Okay, fantastic. Okay, so let's start from Dow Jones Industrial Average. Last masterclass, we looked at this index. It is particular, by the way, just a second, I put the marker that you can see it. Okay, you can see it probably now, yeah? So my mouse. So our masterclass was at this particular time when the index bounced and stayed somewhere in the middle range. And at that time, we discussed if it holds this position, so it might bounce back, but it broke through and went exactly to the next resistance levels, 27,300, okay, and bounced back. So at the moment, we kind of, again, close to this middle range between the fast line and slow line. And the difference is that we on the top of that as well. So now, like I can see that on a pre-market, it's already up. So what we can expect, it can go back to the same resistance. Now, it might go, if we go for weekly chart, just a second. This is a daily chart. So we can see it might go in the same range like in a sideways. At the moment, the market is driven by news related to coronavirus, related to all these troubles which happen between China and India, like the border between all these troubles in the United States happening. So if the media produce a lot of bad news, the market reacts badly. So if media doesn't produce any bad news, the market reacts positively. So at the moment, it's quite volatile. But the thing is, which is very, very important, especially during this time, is to choose the companies properly before you enter. Because in my opinion, the market is quite overvalued right now, and I expect that we are going to have another bottom. So another when it's going to happen, probably when the earnings season starts, and it's going to be in July, August, because a lot of companies, they're going to announce their performance during that specific lockdown period when a lot of businesses were locked down. Okay, and I presume the reports won't be good. So, and as a result, like what I expect, that market's going to go down at that time. All right, so this is Dow Jones. Basically, it's bounced quite a lot back, and some companies included in this particular index, they're not still performing well. So, and this jump up, it's more like emotional, that people see that coronavirus kind of fading away, and on a good expectation. Okay, when we look at the S&P 500, it's very similar to Dow Jones. It's also bounced from the bottom, which was in March. Again, slowed down somewhere in the middle range. And then after our masterclass, which we had here during that time, it broke through. Okay, it went higher than previous levels of resistance, went higher, and then again last week, it's went down quite a lot. Okay, last night actually, I don't know if you guys noticed that market, when the market opened, it was in red. I think it was about more than 1% down, 1.5% down. But when I woke up in the morning, it was up, because during the day there was a positive announcements, and the market kind of moved back up. And at the moment I can see as well, so on the pre-market, that it's already 1 point, like S&P futures 1% up, Nasdaq 1% up, and Dow 1.6% up. So most likely it's going to be going up tonight as well. All right. Now, if we look at the indicators, they're kind of not clear RSI in the middle range, so you cannot say anything about it. Stochastic in a good position for buying, because it's already kind of in oversold situation, but MACD is again in a kind of neutral position. So we cannot clearly say that it's now the resistance or support or resistance, is kind of in between. So I presume the market can go down even lower. Okay, so where would be the perfect time to enter the position? Now, if we look at Nasdaq is very different. Oh, look at my chart. Very interesting. RSI went on the top. Nasdaq is very different from previous two charts. And the interesting thing here, that Nasdaq reached a higher point than it was before the fall. All right. And the main reason for that IT companies, they performed quite well. And people have a lot of good expectations about the companies in this sector. And Nasdaq includes 100 tech stocks. Okay. And this particular crisis affected IT companies in a good way, because a lot of businesses, they, like offline businesses, they had to close themselves, close their doors, and quickly readjust their business to online activity. And a lot of companies, they moved their employees to their houses, and as a result, they had to improve the infrastructure. They had to buy new equipment. They have to buy software, they protect software, they have to buy servers and expand IT infrastructure as much, provide the training for the employees, etc., etc., etc. So a lot of companies, they increase their prices. Even, at least when I was buying equipment, I was telling last masterclass that I had to pay a premium for that compared to what it was just several months ago. So at the moment, it's higher prices. So prices went up, and of course the companies in this industry, they made more money. So as a result, the index went even higher. Okay. But when I looked at companies, I thought maybe I find a good company from this industry for the masterclass, but they're quite overvalued right now because people moving money from other sectors to this specific sector, and they're overpaying for that. So I definitely would probably also stay away from that particular index because it's overvalued. Okay, and when other two indexes going to go down, Nasdaq will go in any way down. So that would be the better time to enter a position. Okay, Mick wrote last candle bounce from EMA to 100. You're talking about, oh, here, yeah, I don't have here moving averages. Yeah, I don't have moving averages, but I presume you're right. So it's quite possible that it happened. You probably have to get here moving averages. It would be easy as well. All right, and if we look at volatility index, VIX, we can see that it was going down. So people kind of had less fear, I would say. And then when it was Thursday, right, the fee increased as well when the market went down. And it was quite a big move down. And it tells us, when we see something like that, it tells us that people are ready for sell-off. People are ready for that. And if the market for few days shows this kind of like fall down, I presume emotions will drive the fall even lower. Okay, so be prepared for that, guys. If you're opening any positions, definitely open it with companies which are like very, very solid and they can withstand this particular crisis. Because even myself, with like maybe more than 10 years experience, very tempted sometimes. Like when I look today and I was going through my list, some companies technically they look fantastic for entry, and like it's so tempting to enter the position and maybe to sell. And because the volatility in retail sector is so high, you can make up to 30% sometimes, like in a couple of weeks. Great, but then at the same time you have a risk. And the risk is that that company is not only going for 20-30% down, but it can go into liquidation, into bankruptcy, because that specific sector is under a lot of stress right now. And of course, when you're choosing even for short-term trade, be aware that it might be a long-term loss for you. So be careful with it, okay? Now, this is indexes. So guys, if you have any questions regarding indexes, like write them down. If everything is clear, put from 0 to 10 how clear it is, and then we'll continue to the industry. Or yeah, to the industry itself.